Ape Nation, make sure you're doing your own DD. Do not rely on Reddit.
And you just said that on camera. This going viral.
Ape Nation, thank you for helping me pass 200 subscribers. If you haven't subscribed yet, hopefully I can earn it today. Ape Nation, good morning. It is Tuesday, June 22nd, 2021. It is currently about 7 o'clock in the morning. And I want to jump right in today. I want to talk about two things. I want to talk about some of the YouTubers and the language they use over the weekends as far as pumping everyone up with their thumbnails and their videos about new catalysts that are coming. What's gonna happen this week with AMC stock. And I've always said, people have watched my channel, just whatever everyone is talking about, plan for the opposite and you won't be disappointed. There was a lot of hype again this weekend about margin calls and the DTC filing, and I talked about it, but I didn't think it immediately meant that there were margin calls coming yesterday and we were going to see a massive spike increase in the price, and we didn't. Alright, so I'm going to come back to that, but first things first, this video Charlie did last night on Ziptrader, it is basically talking about the Reddit post from AMC stock. And they talked about the Ftd'S and the correlation between the Ftd'S, the large number of Ftd'S that were taken out back last 35 days ago that are now supposed to come to fruition, and showing the price bump when we had a huge surge 2 weeks ago in AMC's price. And I thought Charlie last night did a good job breaking it down. Some of the language he used helped clear up some of maybe the misnomenclatures that people will have about it. So I want to take a couple clips from it, break it down. Let's get right into it.
So the concept that I want to discuss with you is this idea of D35 or 35 days settlement. I believe it originated in the RAMC stock form, and you can see the original poster and whatnot. But the idea is that AMC's price will spike before the 35th day after a spike in failures to deliver, since that is the maximum requirement for covering or buying back shares after failing to deliver, based on the theory's opinion on the regulation and what the regulation lays out. And there's some truths in this and some misleading information in this and some things that I think are just kind of inaccurate. But bigger picture, I want to break down the theory and then go into my thoughts.
Okay, so basically what Charlie's saying is there's a correlation between this 35-day period in this Reddit post that the gentleman was talking about, and that we should see some spikes this week coming up, because that happened 2 weeks ago when we're using this 35-day time frame. But there's some important things to keep in mind when you're talking about this time frame, and I'm going to let Charlie continue on.
That was the massive gamma squeeze day that we covered at the time. And you look at something like that 100% plus rally day, it's very possible that you had a combination of both failures to deliver, being forced to cover, then momentum from riled up retail traders seeing how fast it was going up, which then forced a gamma squeeze, which then caused more momentum and more retail traders to pour in. But you consider that just coincidentally, a massive amount of failures to deliver needed to be covered that day, and it does add, again, a very convincing argument in favor of the role of failures to deliver. And the Reddit Apes research goes even further, showing more evidence of price spikes correlated with April 22nd, 23rd, 26th, and 27th. Failure to delivery dates, all above 1 million failures to deliver.
Okay, so real quick, and something I noticed when he was talking, he talked about April 14th and how that correlated to June 2nd. We saw this massive, huge bump from 37 to 72. What they failed to talk about was 2 days later, on April 16th, there were almost 3.5 million Ftd'S that, if you go ahead 35 days, that brought us to June 4th. And we only saw a $10 price increase, right? We went from $48.79, barely, not even $10. So I think going by that exact figures and that exact dates, it's not true, because then we would have seen a massive price increase here on the 16th when it's, another 33% of the shares were Ftd'S. We barely even got another $10 bump. All right, I'm gonna let him continue on.
1 million failures to deliver, later correlating with intraday spikes 34 days later on June 10th, 11th, 14th and 15th respectively. And if you take it for what it is, there does seem to be some correlation between at least the trend of higher failures to deliver, and then 34 days later, you see a spike in prices. And there are problems with this in the calculations as a whole, which we'll get into a little bit later. But because we're explaining the theory, let's just assume that it's true for now. If you consider that most failures to deliver that are above 1 million are most likely to spike 34 days later, it does allow you to extrapolate probabilities of AMC spiking on certain days in the future as well. For example, May 3rd, May 4th, and May 5th, spike in failures to deliver correlates with failure delivery deadlines today, tomorrow, and the next day of
So basically what he's saying is in the Reddit post, they are saying that the next couple days are going to be big because we saw a massive spike in the number of FTDs. All right, now let me jump ahead to why Charlie thinks that this will not happen, and I agree with him 100%.
settlement. That's a very bold assumption because the data that we actually have publicly available doesn't to deliver. They do have to buy them back, and failures to deliver is evidence of naked short selling. I think those three things are true, and they're getting the big picture right, but the smaller details and implications of exact days on this is very, very debatable. For example, this theory is based on vague and legal SEC definitions in terms of what constitutes a 35-day settlement time versus a T21 or a T3 or even next day settlement. And the law cited by the theory maker says that there are 3 different categories of what needs to happen if one fails to deliver. Each category has drastically different indications, and anybody can assume that there's a combination of different failures to deliver that fit into each category instead of all just flowing into one. But the person who made the theory assumed that all of them flowed into that middle category, which is 35-day settlement. That's a very bold assumption because the data that we actually have publicly available doesn't distinguish between the 3. So you can't assume that every single one flows into the one that's convenient for the theory. And look, folks, no shade to the poster. The whole point of a theory is to discuss it, right? There's also some problems in terms of calculating calendar days versus trading days. For example, the rules on the Cornell Law website cited by the poster say calendar day, but other settlement times in many other places say trading days, and the numbers used in the theory.
All right, and I think he makes all great points here, especially using the calendar day versus the trading day. 2 totally different things to go by. You have to be really careful when you're reading these Reddit posts, when you're watching these YouTube channels. You have to do your own due diligence. I think that's my biggest piece of advice to any new ape out there, is just do your due diligence, because if you go in planning, and I know a lot of people did it over the weekend, they went in planning. Same thing with last weekend, right? We had June 18th coming with all the big things. Guys, just don't try to put a date on it. It's too impossible. You just can't. We don't know when that day is going to come. And all of a sudden they're going to decide that they need to cover. Will it be margin calls? Will it be some other catalyst? We just don't know. And as long as you don't keep your expectations too high, you'll be all good. Your emotions won't get the better of you. All right, guys, that's all I got for this morning. Well, real quick, let's take a look at AMC. Where are we in the pre-market? Right now, it is currently 10 past 7, and AMC is at 54.58, down just under 2%. All right, guys, that's all I got. This is Ape Nation. I'm the Massalorian, and I'm out.